This content is brought to you by Linqto, which makes private equity investment easy. I am a user of this platform. They have over 186,000 users, and you can get access to companies pre-IPO. So essentially companies that have not gone public yet, you can invest in them. And it includes AI companies, crypto companies, and other fintech companies. Some of the crypto companies they have in their portfolio include Ripple, Chainalysis, Ledger, Circle, some very big names here. So you can get access to these companies, get equity shares, and diversify your portfolio. If you'd like to learn more about Linqto, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Jack McDonald, who is the CEO of PolySign and Standard Custody. Jack, welcome back to the show.
Thanks, Tony. Always good to hang with you.
Yeah, Jack, there's a lot I want to talk to you about. There's been a flood of institutional investors entering the crypto space, and we've been talking about this, it seems like, for years, and the growing adoption and much more. But let's start with what's new with PolySign and Standard Custody.
Oh, well, thank you. We're very excited with a lot of the announcements. I get asked all the time, particularly from relatives and friends outside the industry. They said, "Oh, I see a lot of news. I think of you. How's it going?" I said, well, it depends what day you ask or what hour, but it feels like the last, 6 weeks, and the timing to me is really powerful, coming on the heels of the 1-2 punch of the SEC's suit against Coinbase and Binance. Then we had this flood of positive news ranging from obviously the Bitcoin ETF announcements. We had Deutsche Bank and Cassis getting into the custody business. We've had the new exchange, backed by Charles Schwab and Citadel. We obviously have had the Ripple XRP news. Just a lot of positive shots in the arm for the industry, and so we're excited about it. We're focused, as you know, exclusively on serving institutions at Standard Custody, as well as our sister company, MG Stover, on the fund administration side. Specifically to Standard Custody, we benefit from a lot of the regulatory guidance that has been proposed by the SEC around what it will take to be a QC if their proposed changes are ultimately adopted. We're about to be launching and putting out a press release in the next couple of days on a new escrow product that will essentially allow institutions to hold their assets with us at Standard Custody, keeping it in a qualified custodian, but being able to pledge or delegate that asset out of their cold storage and use that with other liquidity providers or prime brokers or exchanges. And so it really satisfies the need to keep the asset in a QC, but also to be able to fully leverage that asset and to be able to trade with it. And we do that in an unconflicted way. We're very excited about the partners that we're going to be going to market with there, and we think that that's going to help drive more institutional adoption because it provides a roadway, if you will, or a path towards trading in a very controlled environment.
And yeah, you mentioned the escrow. So it sounds like, if I understood that right, they can pledge it as collateral, even though it's in.
That's right. That's one way to do it. That's right. And we've got a leading prime broker that we're going to announce here any day. We're also making very good headway on the wealth management in the RIA space, where there are a number of these RIA either platforms or TAMPs or asset managers who are looking for a product that they can bring to their underlying clients, but they need a number of things. They need a qualified custodian, again, to meet the new proposed guidelines by the SEC for RIAs as part of the custody rule, the Investment Advisor Act. But they also need liquidity partners to do that. And we've always believed in the segregation of duties between exchanges and custodians. So we'd rather partner with a provider who can provide the trading and exchange-like activities where we provide the custody.
Yeah.
And we think, by the way, that's there's something behind what I just said as it relates to Nasdaq deciding to pull out of their initiative around custody. I think there's an undercurrent there around really segregation of duties more than anything else.
Yeah, that's actually a great point, because I was looking at that when I saw the news and I was kind of confused because Nasdaq is a regulated entity. They've been doing this for a long time. So to your point, you kind of took us there behind the curtain. The reason is because they don't have the segregation of the custody and other services.
Well, that's my view, behind my curtain. But when they announced that, whatever it was, a year or so ago, 9 months ago, I paused because it seemed antithetical to what one of our foundational beliefs was when we set up standard custody, was to keep the segregation of duties between exchanges and custodians.
Mm.
And I think in 2022, the industry learned once again the lesson of the risk inherent in keeping one's assets at an exchange, FTX being obviously the poster child for why one wouldn't do that. Obviously, there was a lot going on with FTX. There was presumably, I don't know, but it feels like there was fraud, there was a lack of supervision, there was conflict of interest, et cetera. Not suggesting fraud or anything even remotely similar at Nasdaq. However, there is a perceived conflict of interest there where exchanges also act as custodians. And operationally, it may not make the most sense for institutions as well. Gary Gensler in the SEC has come out countless times over the last 6 to 9 months talking about his belief and their belief at the agency around the segregation of duties. And so when I first saw the announcement by Nasdaq last week that they were going to suspend their custody initiatives, citing a lack of regulatory clarity or some regulatory concerns, that's my immediate thought bubble, was that it had to do with the segregation of duty. Really mirroring the current status quo around how capital markets work. And I think it's one of the tenets of the current capital market structure and market infrastructure that actually makes sense, keeping those functions separate. And I think we'll continue to see that going forward.
Yeah, I mean, that absolutely makes sense. And like you said, 2022 was a testament to that, having these things separate and having proper custodians, such as you guys, to make sure the markets function well. And a bit of that is related to what some of the SEC's comments, if I'm interpreting it correctly, of BlackRock filing for a spot ETF along with a whole bunch of other folks in Wall Street. But also who's the surveillance partner, who's the custodian, having these things very clear and distinct. It seems that's the direction we're headed in how this market's going to be regulated, if I'm viewing that correctly.
Oh, I think you're spot on. And I think the BlackRocks of the world, the Wisdom Trees of the world, et cetera, are only going to go to market with service providers that they can trust, that mirror to the extent possible how they've operated in the TradFi space. Obviously, all those same service providers are not capable or ready or licensed to provide the same sort of services around digital assets, but there's going to certainly be a bias towards using trusted counterparties who are institutional grade, who are insured and regulated, et cetera. And I think you're seeing that play out, right now in these filings.
So, Jack, I don't know what happened, but about a month and a half ago, Bitcoin's price was at 25K. We still had the cloud of FTX and last year's debacle hanging over us. And then BlackRock all of a sudden said, we want a Bitcoin spot ETF. And then Fidelity and all these other folks joined the line. What do you think happened? Did we hit a tipping point of institutional adoption that BlackRock's here and they're going all in?
Well, I think it certainly paves the way for others to follow. And I think there's a lot of pent-up demand. If you rewind the tape to the beginning of 2022, we were certainly seeing a lot of interest from institutions who weren't yet in the space, but who were starting to wade into the water. And then you had everything from the Three Arrows and Celsius and, on down the road, ending in FTX, that caused those early, those institutions who were waiting in to turn and run the other direction, and just said, we'll wait until there's just more clarity in all sorts of different areas before we come back into the space. Meanwhile, interest rates started rising, and so I think there's another there's another aspect of the decision-making process around investing, where if you can get 5, 6, 7, 8% return on your money in a relatively safe way, for a lot of these institutions, there's less of a need or interest in swinging for the fences and investing in crypto, given the volatility, given the lack of regulatory clarity, given some of the operational challenges. And so there was, I think, another compelling reason why adoption and interest in investing slowed a bit, just given the higher interest rate environment. that we'll find out, in the next day or two, that may be coming to an end here in the U.S. And I think the market's starting to tell us that, coupled with a couple of the major heavyweights, and these are, very powerful, credentialized institutions. And if they're saying the water's safe, we're going to start to wade in, even though it's through a spot ETF. Others will certainly follow, and you get the benefit of also, even though they're unrelated in some degrees, broadly speaking, I think the Ripple ruling around XRP not being a security is also going to have favorable implications on institutions starting to look more broadly at this area as a suitable place to invest. Yeah. You also have, just as I'm riffing on this, I think embedded in the proposed changes of safeguarding rules out of the SEC, I think what the SEC said were, three or fourfold. They basically said, for the first time in whatever it's been, 50, 60, 70 years, that for RIAs, it's okay to invest in digital assets with a couple of caveats. You have to do so through a qualified custodian, and you have to do so in a very regulatory compliant way. And they could have said crypto is not a suitable asset class to invest in.
Sure.
And they did not say that. They said quite the opposite. They said, under certain circumstances, it's an appropriate asset to invest in. So it certainly feels like the train has left the station on multiple fronts. And so it's going to take time. We know that the demand adoption curve is always taking longer than any of us in the industry would like. But if I look at the past 3 to 6 months, there's certainly more favorable signals than not in terms of auguring for, increased investment in the space.
Yeah. On the SEC versus Ripple, the ruling that XRP is not a security, the judge kind of split the baby down the middle, where certain things went in the favor of Ripple, some in the SEC. But the main takeaway, XRP being not a security, is really big for the entire market, in the distinguishing of how tokens are sold on the secondary markets and so forth. It really gives a path to clarity. And it seems like many folks in Congress who have crypto bills in hand are looking to piggyback on this and get something pushed through. What are your thoughts on the impact on the entire industry with this ruling?
I think it's going to be very interesting to see a couple of things. I think you're right, and we've got a big week in Capitol Hill coming up here around crypto legislation. There's a lot of focus right now specifically on stablecoins. We'll see what comes out of the Loomis Gillibrand, next round of bills, and there are some others there. But it feels to me like the momentum, not only behind, because I don't think those, the different legislators didn't have necessarily a view of when the Ripple case was going to be at least partially adjudicated. And again, those are motions that have been ruled upon. The case hasn't been finally adjudicated or settled, but there's some clarity there. And I think that you will see continual momentum. The biggest reservation I have is we're just coming up into an election year, and every cynical bone in my body would suggest that there's not going to be a ton of legislation that ultimately gets passed. But I think we're going to hear the narrative turned up. The volume will be louder around getting some clarity around how the legislators think of this. It'll be interesting to see what prevails now with Ripple and the SEC. Does the SEC just kind of accept that ruling around XRP as a security and let it lie, or do they really want to push the envelope and open up what would be a much broader potential ruling against them for a lot of other similar sort of tokens or assets, that they believe could be deemed to be securities? And if the Ripple case is meant to be, demonstrative and setting a precedence, the implication could be far worse for the SEC. So they may just want to box XRP and say the XRP ruling was a very narrow, fact-specific sort of ruling from the court, and it's really not meant to encapsulate the broader ecosystem of what we at the SEC believe are securities. So I think it'll be interesting to see how that plays out.
Yeah, that's a great point, because there's still some settlement conversations that need to happen, and who knows, on the negotiating table, to your point, they say, hey, this XRP situation was unique based on the facts and circumstances, as they usually cite. and this doesn't necessarily apply to the entire market. And hopefully Congress, these things moving in parallel can act. But to your point, election year next year, so not very hopeful there.
Yeah. But I think in aggregate, it's been a huge. I mean, we've seen that in the pricing of the assets as well. But I think it's been a huge win for the industry. I applaud Brad Garlinghouse and the leadership team at Ripple for really taking this on their back and fighting for clarity. And I think it's going to be a positive. Also, relatively speaking, for the U.S., I think there was so much momentum outside the U.S. and there still is. I think rest of world in many jurisdictions is far ahead of where we are here in the U.S. But hopefully this ruling in the U.S. will help pull us a little bit closer and narrow that gap so that this industry doesn't evolve outside the U.S., which would be a real shame.
Yeah, absolutely. Now, some folks in the community wanted me to ask you, now that XRP has a declaration of not being a security, will PolySign and Standard Custody leverage XRP in any way, or have it available as an asset that you can custody or use the XRP ledger?
Yeah, so we opened the door to custodying XRP a number of months ago. A bit of a complicated decision tree that I won't go into, but we are open for business. We currently custody XRP, and we'd love more of it. So send it our way. Again, we don't trade it, but you can buy it at any number of different exchanges that immediately after the ruling relisted XRP and custody it with us. So we'd love to talk to folks and please reach out.
Another question from folks was primarily you guys service institutions. Are there any plans to offer a retail product by any chance?
Yeah, we're not currently looking at retail clientele for us. We do have some, I will call them aggregators, different types of institutional investors who are essentially populated by retail investors, but we face off against them as more of an omnibus-like account where the relationship with us is an institutional client. So we're not in the direct-to-consumer business. It's not part of the license that we have, and it's not something that we're currently focused on doing.
Got it. Jack, I gotta ask and
ask anything you want, Tony.
So with all of these different big institutions, BlackRock, Fidelity, Citadel, and so forth, are you in talks in any of them? Are you working with any of them? Any name dropping that you can do?
No name dropping, but we're talking to as many big providers as you can imagine, trying to understand where we can be a strategic partner to them. Where we can help extend. I just got off a call earlier with a large market infrastructure provider, and the conversation is around how we might be able to help advance the initiatives that they have, because this technology. I think one of the other maybe subcurrents of the Nasdaq announcement was a realization that this takes a long time to build this technology, and it's not something you do quickly. So we feel like we have a lot of very valuable technology that we built. We've got a very valuable footprint in terms of the regulatory license we have with New York being a qualified custodian, as well as different MTLs we have allowing us to operate across the country. We feel we have a very valuable asset in the MG Stover business around providing fund administration and some very important daily portfolio reconciliation technology that we're rolling out called Auto, and then finally the Atomic Net. So I think there's a lot of areas where we can help institutions access digital assets beyond just crypto. So obviously, we're part of the tokenization conversation, which is a drumbeat that only gets louder every day. And we're excited about the future and excited about the conversations that we're having.
Final question here, because I know you got to go. I recently spoke to Linqto COO Joe Endoso. He talked about Linqto 2.0 using PolySign's atomic settlement, and transactions can be done in XRP as well. I would love to get your perspective on that, and as much as you can share.
Sure. We're very excited to partner with Linqto. They are an interesting organization. He was on, so he talked about their business model, but essentially democratizing access to private company assets, and they do that through creating SPVs and then syndicating that out to individual investors. He was very attracted from day one to the atomic net, because they ultimately see their business evolving such that they would potentially tokenize the SPVs, or at least allow investors to use crypto to purchase some private company shares. But they want to expand their reach for both buyers and sellers outside of the Linqto framework and connect to other liquidity venues or exchanges or marketplaces for different types of assets. And so we're in really a pilot project with them where they would host a node for Atomic Net, and we would help build essentially a messaging layer or bridge between Linqto and some of these other liquidity venues. And we're talking to a number of other broker dealers, ATSs, blockchain powered networks that trade within an ecosystem. And he very much shares the same vision. We're very much aligned with that, and also talking to them about providing custody services. Obviously, they're big fans of Ripple and XRP, and where we can provide custody through the standard custody business to them, as well as another initiative that we have underway.
And I saw PolySign is also part of the portfolio on Linqto, so folks can get private equity shares. Right. Okay. Before I let you go, just to confirm, you said this week there's going to be an announcement regarding the
Registered Investment Advisor, RIA. Yeah, we're going to be putting that on the next couple of days, as well as a press release either later this week or early next week on what we're doing in the escrow front with a leading prime broker in the space as well. So that's a big push for us right now in this escrow product, and we think it's very, very timely in terms of providing a platform really for investors to safely store their assets, but to use it from a trading standpoint as collateral, or as a really it's risk mitigation opportunity for investors to keep their asset in a secured, qualified custodian, but to be able to trade externally off chain, to do that. So very, very exciting.
Awesome. Well, I'm looking forward to that. And Jack, will probably have to have you back on, as those things roll out fully. But thank you so much for your time.
Anytime. Good to see you again.